Welcome to the Unconventional Investor Podcast. I'm your host, Michelle Moses, certified financial planner, licensed realtor, and founder of Me Financial. If you're an accredited investor feeling overwhelmed by managing your portfolio and looking for alternative investment strategies that go beyond the traditional stock market, you're in the right place. Let's head into today's episode so you can start taking control of your financial future. Hello, everyone, and welcome to the podcast. Thank you so much for tuning in. Today, we are going to be talking about another oil and gas investment, but it is going to be geared more towards mineral rights and royalties. So if you've ever explored any oil and gas, there are different ways to invest. You can invest in the actual drilling. You know, there's many ways, but you can invest in the actual drilling, and then there's other things called mineral rights, and we will get into what those are. But if you are looking for things like mailbox money or a 1031 exchange on something that you like, a investment property that you have owned, this might be a great opportunity for you to learn about what you can do with those funds to do a 1031 exchange so that you do not have to pay the taxes. Or again, as I said, maybe you're going into retirement and you just want some monthly or quarterly mailbox money. So this might be a great investment for you. So today, to talk about this, we have Jace Graham, and he is the CEO and founder of Phoenix Rising Capital. And he is a fourth-generation oil and gas professional who has spent the last 2 decades identifying, acquiring, and managing more than $100 million in operated and mineral royalty assets. So thank you so much for joining us, Jace.
Hey, thanks, Michelle. Really excited to be here on the podcast. I've listened to a few of the episodes and think you do a great job of really kind of opening up some of the unique alternative investments that are out there for accredited investors to look at investing in.
Yeah, Thank you. Thank you very much. Well, I'm excited to have you on because we were just at a conference a couple weeks ago. It's a specialty oil and gas conference. And you really stood out to me because of what you do is very, very different. So we're going to get into why it's very different and why I agreed to have you on the podcast, because you guys, I can't even tell you how many hundreds of funds that are out there. And you just, some of them, especially when it comes to like multifamily, they just kind of run together. And there are a lot of oil and gas ones out there, but you really stand out with your mineral rights and what you do. And so can you explain a little bit what mineral rights are and why they are attractive to investors?
Absolutely. So I think we kind of take it back. I mean, the oil and gas mineral rights are part of the bundles of sticks that go along with the real estate. So in its essence, it is real estate. And, when the first president patented and deeded over that first tract of land back in, say, 1840s or 1820s, the owner of that land owned from the center of the earth, basically, to, they say, the zenith in the sky, all rights, all title, everything. And over time, obviously, they started developing oil and gas minerals. Started kind of actually up in the Northeast in Pennsylvania, but down in the Permian Basin in West Texas, and now, throughout the United States, minerals started trading. You could sell your real estate, your surface, and you could reserve the mineral estate, or you could reserve 50% of the mineral estate and convey 50% to the next owner of the surface. And so what happens over time is these minerals get kind of fractionalized out. And what our firm does is we go after and we reach out directly to these mineral owners across the United States to try to have a conversation with them about entertaining an offer to sell their minerals. So a lot of our opportunities that we go after and we acquire are off market. These are not auctions. These are not marketed deals that are out there. These are off market, where our internal team is picking up the phone and having conversations with mineral owners throughout the United States. So I think it's not easy. It's a heavy ground game component, and something that we do very well, that we're known for. And so by doing so, we're able to buy further down without kind of the middlemen, if you will, at a reduced purchase price that then we're able to pass that back to our investors in return.
And you were talking at the conference about the process that you guys kind of go through. You identify an area, right? Mm-hmm. And then you kind of target that area based upon the production, how old the production is, and all that, right?
Exactly. Yeah.
Okay.
I've got a in-house petroleum engineer. He's trained to kind of look at these areas and look at recent activity and what operators are doing what in development. And then we kind of focus our acquisition team into those areas where there is recent development and production and all that stuff that's going on, permits that are happening. I talk to mineral owners specifically in those geographic regions.
Okay. Yeah. And that's why I thought you guys were so different is you don't hear people say that they're actually going door to door and asking people to buy their mineral rights. And so you guys, as just a brief, I know he's talking about to the sky and down below mineral rights. You basically own what is below from the ground down. Yeah. And when they're drilling oil or natural gas, they go down so many feet and then they might leave and go somewhere else. And then it might become more feasible to come back and go deeper. So there might be tons of minerals underneath there that haven't been explored that are just deeper than what the well is or, where they've drilled right now. And so when you own the mineral rights, you own everything that's down below, but you don't have to drill. You don't need to do anything. You could just own it and not allow people to drill on it. But obviously this is what people want to do. You want to own these rights so that you are allowing other people to drill on quote unquote your land, and then they pay you royalties. So when we're saying royalties, that's what we're talking about is you own the land, they're drilling on it, and you are getting mailbox money. You're getting royalties. So a lot of times you're going to hear us say mailbox money a lot in this podcast, and that's what we're talking about. You're just getting your money mailed to you from them drilling and selling the oil, and then it just comes to you because you happen to own the rights to that land to drill. Am I missing anything, Jace?
No, I mean, you did a great job of explaining. I think just to kind of step back, what happens like an operator like ExxonMobil will come in and lease your minerals. Okay, so they've done a geological study. They say, hey, we think there's oil or natural gas there or a combination of the two. And so they'll lease that mineral owner. And typically they'll do it for a 3-year, 5-year term where they've got 3 to 5 years to actually drill that first well. And then they'll pay a little bonus on the front end, say $1,000 an acre. But really where the revenue comes in is the royalty income from the royalty rate. Typically 20 to 25% of everything that comes out of the ground gets, passed on to the royalty owner.
Okay.
And so that's what we focus on is that royalty owner gets that passive income. And you're right, it's very, very quiet. I think that's why a lot of our investors like this asset, because it's not noisy. You're right. It shows up every month. We get a check every month from the operator. We verify to make sure we're being paid properly, that the decimals of interest are correct to our ownership. That's important. And then we get a little monthly check and turn around and distribute that back out to our investors.
Right. And I think I love it because it's not well known. Honestly, this was not really well known. 10 years ago, this was not super popular. It wasn't out there. It was just drilling. Right.
Yeah.
And now there are different ways. I mean, I think just like the derivative market, now there's options and there's futures. Right. It's the same way when it comes to oil, just because I also think it's because it costs so much to drill. It costs so much to do all of these and to set everything up that you kind of have to break it up. And we're human. We're going to figure out how to make money in all different ways, right?
Yeah.
Yeah. So you really stood out to me basically because you guys are doing the hard work. I mean, you guys are doing the grunt work of going door to door to mom and pop, to families, that maybe have owned these things for 100 years and, their kids don't even live in the state anymore, So I think this is really important. And Jace, I want to go back to your experience too, because I think your experience is really important. I have been studying this for about 10 years and I haven't really felt like it came together until the last couple years of really understanding how all of this goes. And what I have seen in the industry is the people that really understand and know what they're doing are people that grew up in it. And you grew up in it. I mean, your dad did this and, you were probably being explained to this, right? When you were 4 or 5 years old, how things were working. Is that how it was working?
You're exactly right. I remember, going out to Big Lake, Texas in the Permian Basin and sitting on a rig with my father when I was 4 or 5. And in fact, I just took my 2 boys, Jet and Bo, that are 9 and 11. We just drove back through Big Lake on our way up to our place in Colorado. And I was able to kind of point out some things that my dad showed me when I was their age.
Oh, wow.
Some rigs and stuff. So we're we're training the fifth generation in the Graham family on what oil and gas is all about. But yeah, I mean, I grew up in and around it. You know, I learned on the shoulder of a giant. My father was a tremendous operator, did things ethically in the right way, and raised capital privately from investors. And so I got to see everything from actually the drilling of wells to the leasing of the land before you drill to kind of mineral funds that we started putting together. And so when I formed Rising Phoenix Capital, you know, mineral funds is the mineral asset class is what I really kind of gravitated towards. And so that's kind of what we built our portfolios around.
Yeah. And I did too. I remember when I first got into it, I was, when they said mineral rights, I was like, that right there, that is the easy, you know, because when you're drilling, you don't know. I mean, now I think the technology, they know if there's oil there, but you know, they didn't always know if there was a lot of oil there and if it was successful. So,
yeah, I mean, you know, the minerals, you know, the drilling deals, I mean, there's benefits to investing in those, right? You get, you know, big tax write-offs from the intangible drilling costs, they call the IDCs, and that's great. There's also that dry hole risk. It's out there. It's inherent. And then on the other end of the spectrum, where we play in the minerals, is that it's, you know, it's very passive from an operating standpoint. We're not drilling wells. We're just buying that asset one time from the mineral owner. And what we like to look at, you talked about the different layers, right? Like a layer cake, if you will, like the Permian Basin has many different zones in depth that you can go in and develop horizontally into. But it'd be like buying a one-story apartment that you paid for, and then an operator drills another well, and you're adding a second story and a third story, and you're getting the rent from the second and third story, but you didn't have to pay for it. And so that's what we really like about owning minerals long term too, is just that serendipity, that upside when operators do come in and they start to kind of figure out how to develop some of these additional zones that may not be economical today,
but they might be tomorrow.
Improves, yeah. Then they develop those. And that's that's when it just really gets fun.
Yeah. And that's what's happened, right? I mean, I think we've become more efficient, not only with our cars, if you look at how much use we get for a barrel of oil in the United States, but also it has become more efficient in the way that people are drilling, and the way that they can get to the oil, essentially.
Yeah. I mean, the United States is energy independent. I mean, we are now an exporter of oil and now natural gas.
Yeah, natural gas.
Liquefied natural gas as well. So usually was constrained by pipeline. We're now exporting LNG, liquefied natural gas overseas. So, you know, oil and gas is not going anywhere anytime soon.
No. And I think that's what we've realized. I think if you saw my history, you'd be really surprised that I have you on the podcast, because I started the Green Chamber of Commerce here in Phoenix, you know, all about, being nice to the environment, I guess. And I was all about, you know, solar and everything, but I just realized over the years, it's got to be a mix of everything. There's I don't think we're helping the earth, but at the same time, we have ways that we want to live and that we are living, and we need to support that in some way. So it just is what it is. Okay, so can we go into a little bit, and I know we're going to go over time on this one, so and I'm okay with that, because I really want people to understand this, so when you're buying these mineral rights, you're targeting it, and you already know that there is a driller that wants to drill, or they're already drilling there. Is that what's going on?
Yeah, okay. That's one of the main fundamentals that we're looking at in our funds, is there existing production? Is the area well defined? I mean, there's production all over, and you can point to what you think production will do in the future. And so that's the main criteria that we look at. So we're not buying what they call white space,
right?
Kind of ahead of the bit.
These are producing already.
Yeah, producing, because our investor base, you know, and myself included, we want yield day one. And so that's what we look for. And then once we kind of find that area and we find the operators that we like, that's when we kind of deploy our sales team into those areas to start having conversations with the hundreds of mineral owners that may fit in that area.
And so because I know when you drill it, you know, the oil is coming out fast, right? But then let's say it's a year or two in. Are you looking for the new ones, or are you looking for the ones that I'm not. I know you guys all have terminology for this.
No,
are you looking for the ones?
No, you're right. Because the production on an oil well, it's a declining asset, right? There's a decline curve. So a lot of it comes out what we call flush production in the beginning, and then it kind of tapers out and then levels out and goes flat. What we try to do with our portfolio, and this is what Adam Lapucci, our petroleum engineer, is just really good at, is kind of finding this blend so that we can have kind of a flat yield to where we're buying some stable cash flow today. We're buying some with some additional kind of upside, some meat on the bone, if you will. That's what our buyers like. And then we got some that may just be a little bit of that kind of that initial flush production. And so what we're trying to do is build a portfolio that has these blended assets that kind of have a average kind of a flat, and we're pushing 15 to 20% cash on cash based on a historical.
That's wonderful. Yeah. Okay. That sounds great. And it's a smart way to do it. I mean, obviously, yes, blending it would be a smart way to do it so that you, or you're not taking too much risk. And so let's talk about your funds and the way, because you've got we have two tiers of way you can do it, right? So the reason that you can do the 1031, alluding back to where I started in the podcast, you guys, is that you're owning land. So you would be selling an investment property, something that you own for business, and you could 1031 it into mineral rights. And because you're actually owning the land, so it's real estate for real estate. And then you have that prong, right, Jace, of that you can 1031 into some mineral rights. And then what is the other prong that you guys have, the other option?
The other thing we do, and again, kind of really what our bread and butter is our high yield mineral funds. And so, with the 1031 exchange, you're directly investing into maybe, a handful of assets or wells, right? In a fund, in a portfolio, you're in, hundreds of wells diversified across multiple basins. And that's kind of where we've really kind of found a niche for, because like you said, Michelle, I mean, there's really not a lot of this type of product out there. I mean, just Google invest in oil and gas minerals, and you're just not going to see a lot of opportunities to do that from, accredited investors. So that's what we look at. We're looking for good cash flow, kind of the return profile that we're targeting. We want to have a 15 to 20% kind of cash on cash yield during the hold of the fund, and then look to divest the fund in call it a 3 to 5 year window for a 1.5 to 2 to 1 MOIC, or multiple on invested capital. So you invest $100,000, we want to get you 150 to 200 grand back. And our current track record is on par to show that. And it's been underwritten by Mick, who was at the conference we were at not too long ago.
And how do you exit? Do you sell it to other producers, or?
There's various ways. And so right now, we're taking our portfolio and we're actually finding kind of best buyers based on asset class and where they're buying. So you got big private equity funds that are in the market now, that have come in within the last, call it 10 years or so, that they want to buy as much as they can. And they're not going to do this ground game. They got to put, 100 million, 500 million to work.
No, they want people like you doing that work.
Exactly. So we're happy to sell to them. Another way you do it, there's some public auctions that you can go onto, like EnergyNet or Oil and Gas Clearinghouse, where we can list these at a strike price that works for us. But also the industry's, it's a small pond. And so we know probably best buyers for each asset class, or asset that we own. And so we reach out, and it's very personal, just like we are with our sellers, with our buyers, being in the business and knowing what they're looking for and being able to deliver that to them.
Okay. I think that sounds wonderful. And so then if they did a 1031 and just did mineral rights, the idea is that you would own that for the long term until you wanted.
Exactly. And so we've got clients that do 1031s with us as well. So you can't 1031 into a fund. You have to have that direct title, like you mentioned. Mm-hmm. And so we kind of hold their hands, kind of show them what we have in inventory that could work for a 1031 exchange. And if they say, hey, that works, let's do this, then we can kind of help facilitate that whole transaction. And then we hope to earn your business on the mineral management side in that world, because there is some kind of uniqueness with, division orders that get issued from an operator when a new well comes online. You kind of want someone to kind of verify some of that stuff. And then the check stubs come in, and they're sometimes kind of complicated to understand from a layman's perspective.
Yes, very.
And so we kind of do all that and send out, monthly reports and just manage and just make it super simple. And so that's something we also do as well.
Okay. And as the mineral rights, I mean, to me, this is something that I own, and I'm just going to hopefully own it forever and give it to my kids. I mean, that's the way I think of it.
Great strategy.
Am I thinking about this right? Yeah. I mean,
to own, long-term minerals, I mean, it never hurts. Again, that serendipity, that upside that maybe we can't point to right now, but we know it's out there. We know that we're seeing operators develop different zones, maybe 5 miles away is going to happen. And timing kind of, shows us that it works. So we own minerals, obviously long-term. We also have some that we're going to be turning shorter term. So we kind of play on both.
Yeah. So you probably analyze yours a lot closer than, mine is more. I guess I would get to the point. I'm just going to buy some every year and
I
you know,
can't go wrong there.
and just keep going with it.
I think on the where we bring value on the mineral management side is we also can see indicators on activity that's going to be happening in and around your portfolio or the asset that you acquired, and we will reach out and say, hey, they just filed 6 permits just to the north of where your asset is, and oh, by the way, there's a rig there. All of a sudden, the value goes up on it. Maybe a good time to maybe reach out and see what the market would be willing to pay. If you're interested in selling or divesting.
So it'd be a good time to sell and then maybe buy somewhere else.
Exactly.
Yeah. Or do something else with your money if you want to. Exactly. Sometimes it's just time. So why are people actually selling their mineral rights? I mean, is it just run the gamut of 1,000 different reasons? It seems to me they would just own it forever, but sometimes maybe they just need money.
Yeah, it varies. I mean, there's various life events that occur. There's the good and the bad, right? There's, people need money, they want to cash out. Well, we see a lot of times, like, when people get a little bit older, they just, they want to kind of consolidate and make it easier on their spouse or their heirs, and just cash out and take that money and do something else with it. We work with, companies that may be selling down, they need cash to go drill. We worked with a family that had 10 heirs, and there was a elderly gentleman, and he basically got them all together and just said, now's a good time to kind of consolidate all this. And so various reasons. What we really try to do is kind of understand the why and kind of help with the why and try to provide as much value to our sellers as we can, whether that's providing an engineering report on how we value the minerals, so they kind of understand, again, pop in the hood to say, here's how we value, here's what we're seeing, here's how we're underwriting, and providing that back to our sellers as a value add. Something that we try to, leave everybody with a little bit of value.
Yeah, absolutely. My whole philosophy is we can all win. I mean, we can all make money together. We don't need to be ripping people off to be doing anything. So yeah. And that was another thing I liked about the conference. You just seemed real honest and just, you're like, I'm not looking for everybody. I'm just looking for my people.
I know. I did say that.
Yeah, I'm just looking for my people.
Yeah.
And I think that's a great attitude, especially when it's a relationship business like this. And, a lot of it is relationship business. So, you really stood out in that. And then also, I don't know if you've listened to all these. I have litmus tests for funds. And Phoenix Rising has skin in the game. They put their own money into every single fund that they do so that their interests are aligned with the investors. Absolutely. And as you guys know, that is my number one litmus test for any alternative investment. And they do this. And then Jace has tons of experience. He's been doing this his whole life. So again, that's why I agreed to have you on the podcast. So
listen, I really appreciate it. It's an honor to be here. And it's hard work that what we do. We're not trying to be the biggest fund out there. We know what we do. We know how much we can deploy in a year, and we stay very focused on that. So that we can turn around and deliver the best returns back to our investor base.
Well, and I think that's how you get the best returns, because when you get into these super large, anything, you're talking about oil and gas, you're talking about multifamily, when they get really large, the returns tend to go down. There's just more hands in the pot. There's more people working it. It's, there's just more fees. So I tend to be, just with my style of investing and for my clients, is medium to small, just because I don't always I like the tried and true huge, it's safe, but you also just don't earn as much. So I kind of tend to lean towards the medium, which is where you kind of fall. So, okay. Am I missing anything of the highlights of Phoenix Rising or anything?
Yeah. Rising Phoenix. No, okay, I think you did a great job. You nailed just about everything. So
sorry, I always say Phoenix because I live in Phoenix. So
that's the name of the soccer team, right?
Yeah. And so you guys, if you want to go to their website and check out the fund, it is La Plata Peak Fund, LAPLATA peakfund.com. And Rising Phoenix does have a website. It's rising-phoenix.com if you wanted to check that out too. But if you just want to do the fund, it's laplatapeakfund.com. And Jace, thank you so much for being on. I really enjoyed our conversation. And I hope that something good comes of this. And listeners, I hope that you found this very interesting, and maybe it'll fit in your portfolio.
I appreciate the time, Michelle. Thank you,
Jace. Have a good day, everybody. I hope you got something out of this. Thank you for listening to the Unconventional Investor Podcast. I hope you feel more confident in how you can grow your wealth using the strategies I shared in this episode. If you're ready to take the next step in diversifying your portfolio outside the stock market with alternative investments, Head to mefinancial.net/contact us to book a 15-minute consult call with me. Let's discuss how we can work together to achieve your financial goals. Until then, I'll see you on the next episode.